This conference will now be recorded.
We are now ready to start our third segment of this 2-week chapter on Schedule C, having your own business. And this next part may be the toughest part of all 4 segments as we look at the self-employment tax, which in itself isn't that tough. But when we get to the brand new items that were just released in this past year called the Section 199A Qualified Business Deduction, that is a little bit more tricky, but we're going to kind of put everything together in this section where you can kind of see how the tax return also does some of the Schedule C expenses and calculating some of our answers. All right, so let's jump in here with the self-employment tax. If you remember from Accounting 101 and/or payroll, every employee has to pay Social Security at 6.2% and Medicare at 1.45%. And then together that equals 7.65. That's what's called your FICA taxes. When you're an employee, the employer also pays the exact same amount out of their own pocket that you paid in. So they also pay 6.2% and 1.45. When you combine all the employee and the employer's portion, it totals out to be 15.3%. And you're going to see that number come up as we calculate the self-employment tax if you're a small business. Because if you're a small business, you not only have to pay for the employee, the employee portion, because you are both. You're the employee and the employer. So that you get hit twice and you have to pay the entire 15.3%. Whereas if you were in a employee-employer relationship with another company, you only have to pay half, the 7.65. So when a small business calculates their self-employment tax, they always start with net income, which is better than obviously starting with just your gross revenue. You get to deduct all your expenses. And then let's go ahead and jump to the 1040 so you can get an idea of where this is going to end up. So I've got just a practice return up here, Joe Practice filing single, nothing on the 1040. The first thing that I'll bring up is where your Schedule C income is going to flow through, and it's going to end up here on line 12. And we'll get into that. We'll jump into that even more detail here in a few more minutes. But for right now, I wanted to show you where the self-employment tax initially falls and then where the other half of the self-employment tax deduction goes. So the self-employment tax is located here in Schedule 4, line 57. And it eventually, you want to remember this line number, when you add up all the extra taxes, this one included here will be going to line 14 of the 1040. So if you had $1,000 in self-employment tax, it's going to end up here on the 1040 as other taxes. Now, the one thing you are allowed to do when you do the self-employment tax is you're allowed to take a half deduction of whatever your self-employment tax was. Now, that's not as good of a deal. With the self-employment tax, it's a dollar for dollar tax. It's very similar to the credits that we had talked about right before the midterm. Credits are a dollar for dollar off of your taxes. These additional tax, this is a dollar for dollar adding on to your tax bill. Whereas when you're allowed to deduct half, because think of you're comparing yourself as an employer. So what they do is, since employers are allowed to deduct off of their net income how much FICA taxes they pay for their employee, you get to do somewhat similar of the same thing here. You get to deduct half of whatever you paid as the employer part. So it helps you some, but not a great deal amount, because you're only getting dollars off of your taxable income, not a dollar for dollar off for tax liability purposes. Okay, so that's where that's going to go. Now let's figure out how we calculate it. Oh, one other thing here, nowhere does the self-employment tax show up on the Schedule C. It's all on the 1040 and the other schedules. And when you do the when you do what's called a Schedule SE, this is what it looks like. You have two options. You have the short version or the long version. almost all the time you'll want to use the short version if you can. The primary reason why you may not be able to use the short version is if you come into a time when you are in excess, either your wages and your business income or just your business income is going to be over 128,400. Remember, that's the cap. That cap changes every year. So if you're watching this in the latter part of 2019 or 2020, this number will actually be a little higher for you, but it's going to be somewhat close. The cap changes every year. Once you hit that cap, if you remember back to 101 or payroll class, you no longer pay Social Security tax. So it really would cut down on the amount of self-employment tax you have. But as long as you're under this number, you can use the short form. And when you do, you kind of start out here on line 2. You put in your net profit from your Schedule C, or what's called net income, what I refer to as net income. And then you multiply that number by 0.9235. If you notice, that's 7.65% less than 100%. So that's the amount of taxes that the employee has to pay, and then the employer has to double. So they give you a little bit off on that on your net income, saying you don't have to pay all of it, because we're going to take that, we're going to take like a deduction, like you had a deduction. We're going to take that off of your income, and then you're going to multiply whatever's left by 15.3%. That's the number I had talked about, which is the FICA taxes combined, the employer and the employee part. So let's go through an example, and I summarize everything in my little notes here. Whatever your net income is, multiply it by this decimal, and then whatever that number is, multiply it again by the 15.3%. The answer that you get ends up on that Schedule 4, line 57, which eventually goes to line 14 of the 1040. And then you take that number, whatever it is, and you get to deduct 50% of that off of your federal income taxable income. So that goes on Schedule 1, line 27, to reduce and get you to a lower adjusted gross income final number. All right, so using this information here, go ahead and let's see if you can answer example D here to figure out these 3 questions. How much Social Security tax should this person be added on to their bill, their liability? Where does it go, the self-employment tax? And how much of a self-employment deduction are you allowed? So go ahead and pause, and then we'll start up here in just a few seconds to go through it. Okay, so the answer for this one, what I'm going to do is I'm going to bring up the calculator. It tells us that we have a business net income of $37,500. We want to multiply that by 0.9235, and then take that number times the 0.153. So this person's going to have, round to the nearest dollar, a self-employment tax that they have to add to their bill, which is quite a bit, of $5,299. So $5,299 would be our answer for line 1. And where does that go? That goes on the Schedule 4, line 57, which then ultimately on the 1040 ends up on line 14. Now the final question says, okay, if you have to pay the $52.99, you do get somewhat of a deduction off your taxable income, and that would be half. So your answer here, rounding to the nearest dollar, would be $26.50 on line 27 of Schedule 1. And we're going to work with more of this in just a few more minutes. So if you are still a little fuzzy, we're going to see even more in detail how this works and how it all applies to the 1040. Okay, now a brand new section that just came out with the new tax law of the 2018 tax season. What this is corporations were initially, the government, Trump, wanted to find a way to provide small businesses with a deduction similar to what a corporate may have when they have qualified dividends and different other options like that, where a self-employment person, they're taxed fully on all of their income with nothing special. So for businesses other than the corporate business, you have a chance, if you meet the specific guidelines, to deduct up to 20% of the lower of one of these two, whether it's your taxable income or your qualified business income. Whatever's the lower one of those two numbers, you take 20% of that. Now, the bare bones is, as long as you make, if you're married filing joint, $315,000, if you make less than that, it doesn't matter what kind of business you have. Or if you are any other filing status, as long as you make under $157,500, that's your taxable income. So that's after your standard deductions and any other deductions. As long as your amount is less than these, doesn't matter what kind of business you have. All you've got to do is find the lesser of the 20% rule. So 20% of your business income minus, they do not want you to keep in there the half self-employment tax deduction that you would get to take, that we just calculated. So you get to take a half of whatever self-employment tax you pay. Well, they want you to take that off of your income to get the 20%. Or you take 20% of your taxable income. And when they say taxable income, remember, taxable income is your line 10. That's taxable income. Now, to get taxable income, technically, you have to subtract out line 9. Well, that's what we're trying to find. We're trying to find line 9, the qualified business income deduction. So for this purpose only, what they mean by taxable income is considered your tentative, or what I call your tentative taxable income. You don't include anything that would go on line 9 because that's what you're trying to figure. So you would add up all of your income minus your deductions to get to line 7, your adjusted gross income. Then subtract out your standard deduction, and that is going to be your tentative taxable income. Now, the only other little rule that they have is, since qualified dividends and capital gains are taxed differently, you are not allowed to keep any of those income items in your taxable income. You have to reduce, you have to take those back out for this calculation. So just a little caveat there. Now, so what if, the question then is, what if you're over these amounts? If you have a really successful business, if you're over them, then you have to make a first determination. Am I considered a specified service trade or business? And basically all this, the only word you really need to know is it a service type business? A service type business in that as the owner, your skill, your principal asset or skill is the main driving force of the business. So as an accountant, the CPA who owns that business would be considered a specific service trade or business. Health, law, the lawyer, a doctor's office. The doctor is the service provider. If you fall under this, then you are greatly limited. Note the phase out here says, if you make less than 315, no problem. If you're between 315 and 415, then you start to be phasing out the 20% rule. And these are done just like we have done in the first part of the semester. You take your top number of the phase out, so the 415, and you subtract out your taxable income. So, and it would be somewhere in between here if you are in this range. And then you divide it by the span, and the span for the married filing joint is 100,000. When you find that answer, that's going to be a percentage. So maybe it's 50%. You then have to calculate this amount up here, the 20% rule, and then take 50% of that. And that would be what's allowed as a qualified business deduction. Single and other filers use this much lower number. So everything is doubled for the married filing joint. So in this one, there is no marriage penalty. Notice here the few occupations that are excluded. They're not considered a specified service trade or business. For whatever reason, it was Congress decided, probably through some lobbyists, that we are going to exempt these two only. So basically you think, well, what other type of businesses are there if they're not a service business? And that would be your manufacturing type businesses. And that's what Congress had basically narrowed in that they wanted to serve in this case. They wanted to provide a 20% rule for mainly manufacturing businesses or your very small businesses. So any type of business where you sell inventory, you're allowed to take the full deduction, the full 20% potentially. All right, so if you're over the 415 or the 207 for people single head of household, then you cannot take any type of the qualified business income deduction. If you're not one of those, you're one of the manufacturing type or your retail, then you have to do what I've separated out into a 3-step process. The first step, you have to go back and do the 20% rule, just like any other business did. You have to find the lesser of. Then the second step, the new one, the second piece is you have to find the greater of 50% of your W-2 wages that you pay out in the business. So if you have employees, or 25% of your W-2 wages plus 2.5% of the business's unadjusted property. So notice here, and then when you get to step 3, you basically take the lesser of steps 1 and 2. So if you come up here and you make a whole bunch of money, say 500,000 married filing joint, and you're not an SSTB, you still may not be able to take anything, because if you figure this one up, and I'm just going to throw a number out there, say 50,000 is your lower of the two, but you don't have any employees and you don't really have much in the way of qualified business property. So this answer here would be 0, perhaps. When you come down here to line 3, step 3, and you have to find the lesser of steps 1 and 2, well, step 2 would maybe be 0. So therefore, you wouldn't be able to take anything if you're in the really high bracket. So if you're in the really high bracket, basically they're giving you the deduction if you employ people. That's the extra little caveat. You have to have a hurdle. As long as you have people that work for you, then you're going to be much more likely to take at least some of the deduction. All right, so we're going to go through some of these because they can be complicated, and then I'm going to have you go through a couple on your own to finish out this part 3 section. All right, so we have a married filing joint couple, and one spouse has his own business, net income of 500,000, and then I tell us how much other property they have in their business, unadjusted basis. So that means no depreciation, without depreciation. W-2 wages of all the employees is 150,000. Not an SSTB, so this would be more of a manufacturing type, so they're allowed to take the deduction even with a higher business income. And then when you tack on the other spouse, their W-2 and any other income minus their deductions, I give us that their taxable income is a really high 800,000. So I want us to determine what is the qualified business deduction that this couple would be able to take. All right, since they are above the threshold, remember the married filing joint threshold, they're above this, or actually they're above the lower piece. So once you're above that lower piece of 315, you have to decide if yes, I'm an SSTB, or no, I'm not. If you're not, then you have to go to the 3 steps. All right, so let's do step 1, step 2, and step 3. Step 1, we have to find the lesser of. Remember, we find the lesser of their taxable income, which I tell us is 800,000. So 20% of that is 160, or 20% of their business income minus self-employment tax. Now, for ease sake, I didn't go in and calculate the self-employment tax and then take half of it. So we're just going to pretend for this one. We won't later on, but just to get the bare bones here and not get too deep in the weeds, let's pretend that this 500,000 is after subtracting the self-employment tax, half of the self-employment tax. So 500,000. So we're at 100,000. We take the lesser up. So that is our number that we carry forward out of step 1. Step 2, we take the greater of 50% of the wages. So the wages we paid our people was $150,000. So 50% is 75. Or 25% of the wages, which is 37.5, plus 2.5% of any basis in all of our property that we have. So 2.5% is 10,000. So when you add up the 37.5 and the 10, you get 47.5, but it allows us to take the greater of, so 75. And then step 3, remember, is the lesser of step 1 or step 2. So the lesser of these two would be 75,000. This couple would be able to take a line 9 deduction on their 1040 of $75,000. Okay, now I'm going to walk through E with you as well, because what we're doing with E is we're going to see how all of this fits in to our entire 1040. I don't like to necessarily look at things in pieces and then move on. I like to look at them in pieces and then put it into the whole, so you can see everything that's going on and how it affects the whole return. All right, so some items that we're going to need to, maybe you might want to have a little side sheet so you can mark these down, or just simply write them in, your answers, or off to the side if you need to do some calculations. So this person here is a self-employed business owner, and that's all he does. He doesn't have any other income. His whole income is $67,000 net income from his mowing business. Now, I tell us the date of birth simply because when we have to figure up the standard deduction, this individual doesn't get anything extra from his standard deduction. He simply gets the regular amount. He doesn't get the additional for being over 65 or blind. All right, tells us we pay $4,000 a quarter, which is quite a bit, $4,000 a quarter in our self-employment taxes, which include the federal tax as well. This is the only income for the individual, and then I want us to calculate all of these line items on the 1040. All right, so let's look at the 1040 and see how these go. Line 6 is our total income, which includes anything from Schedule 1. So on Schedule 1, I told us that we had a business income of $67,000. So $67,000, if that's the only thing we have, it comes down here to our total, and it says send that on to line 6. So on line 6, I have simply my business net income, $67,000. Now line 7 says basically it's the same number, except subtract out any adjustments that you have from Schedule 1, any deductions. Well, the only deduction I'm going to have that I had mentioned in my little problem would be half the self-employment tax. So then that means we have to go ahead and figure out what is the self-employment tax for this business. All right, so let's do that. Let's go back up to our self-employment rules. So we need to look at these. Our business had $67,000 of net income. First thing we do is take that times 0.9235 and then multiply that number times the 0.153. So what I first done is I first had to calculate our total self-employment tax. So if you remember where that goes on line 14 of your 1040. So we're going to put on there 9467. 9467 would be our answer down here, line 14. So we could go ahead and fill that in. Now we take half of this. So let's take 9467 and divide it by 2. And rounding to the nearest dollar, we get 4734. 4734, that's going to go here on line 27 as a deduction. So what I'm going to do is I'm going to take 67,000 minus the 4734 for the amount of deduction I get to get my line 7 on my 1040, my adjusted gross income. So my adjusted gross income is the $62,266. because of that half of the self-employment tax. Now for line 8, the standard deduction for somebody who is single, well, it's $12,000. Program actually gives us that when we look at it. Now it's not always going to be $12,000 if you're head of household, it's not, or married filing joint, but for single it's $12,000 as long as you don't get the additional standard deduction. Now we're ready for the next new part. How much of a business deduction do I get? A qualified business income deduction. All right, the first rule I have to look at, am I underneath the filing, the guidelines? Remember the guidelines were, let's go back up to the guidelines. For somebody single, did I make at least less than $157,000? I did. My net income was under that even before taking the standard deduction. My net income was only $67,000. And then when you take out the standard deduction, it would have been definitely lower. So I'm allowed to take this. I'm allowed to take this qualified business income deduction, even though it's a service type business. Doesn't matter. I'm in the lower threshold of the income. So now all we got to do is start figuring out what our answer would be. How much of a deduction do I get for line 9? So let's do the 2 steps. Remember, you take 20% of your business income minus the self-employment tax, half of it. Well, since this individual only had self-employment income and no other deductions, I can simply just use this number. I don't have to do it again. You can, and I did that, and I do that down here on my answers so you can see. So 67,000 net income minus half the self-employment tax gives us the same number we already had for line 7. Now that's not going to always be the case, but for our little example here it is. Take that times 20% and you get 12,453. Or we have to take the lesser of that, or 20% of our taxable income. Well, our taxable income, let's go back to my answers. Remember, my taxable income is going to be, because we're going to temporarily omit line 9. So when we get to line 10, all we got to do is subtract out our standard deduction of $12,000. So 62,000 minus the 12 gives me taxable income of 50,266. If I take 20% of that, I get 10,053. That is the lower of these two. So that's going to be my line 9 deduction. So when I take the 62 minus the 12 minus the brand new amount that I found, the 10,000, I'm left with actual taxable income of 40,213. Now what I want you to do at this point is open up to the back of your book, way back to week 1 when we did this, as to see how you can figure out how much tax you owe. Well, go ahead and figure it up. Look up in the back of the book, somebody with taxable income of 40,213 who is single. Go ahead and pause and do that now. All right, when you've looked that up, you should have found 4789. That's how much tax, federal, just federal taxes, this business owes. And then we already filled in line 14, the self-employment tax. Notice how it's pretty much double the federal income tax. That's a lot of self-employment tax. So total, when you add those two together, this individual ended up owing, with only 67,000 income, so not that much income really when you have your own business. They had a 67,000, they're paying 14,256. That's a lot. Let's do the math there. 14,256 over 67,000 income. They're paying 21.3% taxes just in federal and FICA taxes. So that's a pretty big chunk. Now the last part, I tell us in our in our example that this person paid in, let's go back up here. This person pays in $4,000 a quarter in self-employment taxes. Well, self-employment taxes are going to end up down here on Schedule 5. When you make your estimated payments, which also self-employment payments, sometimes people call them that, line 66, so if we have $4,000 a quarter times 4, that would be $16,000. And then when we add up all of these, that $16,000 ends up on line 17 of the 1040. So line 17 would be the $16,000. And then we only owed $14,256. So the difference is our refund. So you may want to, at this point, if that will all seem like a blur, go back and rewind this part of the video and go through it again. Because next, what we're going to do is take almost the same thing in our example F. The only difference is we even have the same amount of income. When you add up these two numbers, it's still $67,000, the amount of our previous example. However, I split it up differently. This time, the individual works a job and gets W-2 income. And then on the side, earns an additional $30,000 in mowing. So he mows a lot less for his own business because he does something else as his regular job. And I tell us how much taxes he has taken out. And then how much he pays in estimated taxes for the year, $2,500 additional. So what I want you to do is using the same logic now, but numbers are going to be a little bit different because we have less business income. So if we have less business income, we have less self-employment taxes. Therefore, we would have less business income deduction as well, perhaps. So what I want you to do is using the same formulas that we did up above, same process, go through, and it's going to take you maybe 10 or 15 minutes, line 6 through all the way down here to line 19 or 22, depending if he gets a refund or owes. So go ahead and pause and do that now. Okay, so as you're going through this one, if we looked at the 1040, our line 1 would be 37,000. And our line from down below, other income, from Schedule 1, our total income would be another 30. So 37 plus the 30 gives us total 67,000. We're at the same place we were last time on example E. But this is where it's going to start getting different from here on out. Line 6 is the same, 67,000. But line 7, we now, to be able to take half of our self-employment tax, we've got to figure out what is the self-employment tax. So let's go through the same process we did before. Take the net income times by 0.9235, and then whatever that number is, times it by 0.153. And rounding to the nearest dollar, we get self-employment tax of $42.39. That's going to end up what goes down here on line 14. So you might as well go ahead and jot that in, our self-employment tax. Now take half of that, $22.21.20. That's how much we're allowed as a half of our self-employment deduction. So to get line 7, all we got to do is take line 6, the 60. I'm going to make this a negative number, and add in the 67,000 of total income we had. So my line 7, when I take my half of the self-employment tax, I have adjusted gross income of the $64,880. Now line 8's not going to change, it's still 12,000. Now we're ready for the second part, figuring up our other new item, the qualified business income deduction. So let's go, hopefully you've now done this, but if you haven't, if you need to update your numbers, go ahead and pause the video and update your amounts based on the answers we have so far and redo the line 9. So for this one, when we do line 9, our taxable income is actually this time going to be higher than our business income. Now, what I mean by that is when we take 30,000 income minus half of our self-employment tax, we're left with only business income of this 27,880. At 20%, that was 5576. Or looking at our taxable income, our tentative taxable income, remember what we do, we take line 7 minus the 12,000, because we don't know line 9, and our tentative taxable income is 52,880. So I take 52,880 at 20%, and I get this number. So remember, on the prior example, it was our taxable income that was the lower amount. Typically, when you have a W-2 involved, not always, but if you have a W-2 involved, it's going to be your business income that's going to be lower. So we're going to tack this on to line 9. So my line 9 takes off another 5576 off of my tentative taxable income. So I subtract 5576, and that's how I got the 47,304. If you needed to update your number, go ahead and update it and pause, and then look this number up in the back of your tax tables again to see how much federal tax we owe. So the federal tax owed, when you look this number up in the back of the book, is $63.51. And then when we already added in line 14, so this person owes quite a bit less in self-employment tax because their income was so much lower. So when we add these two up, this is how much federal taxes and FICA taxes this person owes. And finally, this individual, they paid in $18,000, and I forgot to put this in. Remember, they also had $4,000 taken out of their W-2. So we have a total of $14,000 that was paid in compared to what was owed of $10,590. So this person doesn't end up owing. They actually get a refund. I need to update my answer here. They get a refund. They paid in $14,000. They paid in the $2,500 every quarter. Plus, it told us in the instructions they had $4,000 taken out of their W-2. Let's go back and make sure. Yep, $4,000. So $14,000 minus the $10,590, we're left with $3,410 is the amount of a refund. Now, what I want to do is I want to show you how this plays out on the real tax form, and so you can compare your answer. So let's do that for this for our Joe practice guy. So I'm going to go here to box 1, put in just our very basic wages that I gave us. I said it was 37,000 in wages and 4,000 was withheld. I'm not going to fill in any of the others. I'm just filling out those top 2 lines that I gave us. And then I'm going to go back and let's go to Schedule C. So Schedule C here on line 12. It told us we had 30,000 in net income. Now, typically we would put the business name in here, and I would have to fill in the codes. It is important that I fill in the codes. The codes can be very long to look through. So a lot of times it's just easiest if you go ahead and Google it and figure out what it is. Put business income codes, business tax codes, and then what type of business you're doing. Maybe it's landscaping, instead of you having to figure out what do they mean by landscaping and all of this. So we had business income of 30,000. So let's just put in that maybe he made 40 and then had 10,000 in some expenses. So that leaves us with the 30,000 net income. When we go back to the 1040 at this time, I've got my 37 plus the 30, so 67,000. That matches line 6. Now they're going to subtract out half the self-employment tax. So we come down to the self-employment tax, and that matches what we got, the 2120. So that means what also match will be Schedule 4, our actual self-employment tax. And you can see when they do this on the form, if you go in and actually see how it's calculated, the 4239, they do use the short form because they can and they should. The 30,000 times the 0.9235 times the 15.3%. So that's how they get that. And then half of it is our deduction. Move on down now, minus our standard deduction. And then if we forget, if we look back now, line 9, the amount that was calculated, sure does. It matches exactly what we have, 5576, leaving us a taxable income of the 47,304, tax liability of 6351. We're matching up perfectly. 4239 is the self-employment tax. And then the last thing that we have to do is fill in, and let's see how we do this, our estimated taxes. So the estimated taxes are way down here in Schedule 5. It says I pay in $2,500 a month. So we're gonna copy and paste that every quarter. And then notice the refund, $34.10. And I got $34.10 when we did it by hand. So we can get the same answers. You can see how much quicker the tax program does everything for us. It makes you appreciate the tax program. Does it in like 5 times as faster than we can do it by hand at least. All right, the last example that I wanted to show you is, well, what happens if your business is not or actually is an SSTB, a special service, specific service trader business, and you are over the income? That's what example G is going to show. So example G, we have a private medical practice. So we would be a medical, we're a service type business. Same date of birth, still single, but this time I've actually given us a few 1040 items to put in. It'll give us a little bit of practice putting those in. So if you want to go ahead and try to do this on your own, go ahead. And then here in a couple seconds, I'm going to go through it with us as well using the 1040. Okay, while you're still hopefully going through this, I'm going to update some of our amounts. It tells us here his estimated taxes for this business are $24,000. So while I'm on this screen, I might as well update this for our new taxpayer. It's going to give us quite a refund initially, $89,000, but of course that's not going to stand because we're going to update our Schedule C. But first off, what I want to do is, with this individual, all they had was their business income. There was no W-2, so I'm going to delete my W-2 copy. And then I'm going to go in and update my business income, my Schedule C. So we're going to adjust this. All right, off to the side, what I'm going to do is, hopefully I can put these on the same screen and we can still read it. Yeah. All right, so our new income is $500,000 for the business income. And then it tells us some other things, and let's see where they go on the 1040. So help get us a little bit more acquainted with, or not the 1040, but the Schedule C. Our nurse and secretary salaries of $130,000. So I come down here to the wages. We have our line item. We can just put that right in. We don't have to fill in anything special. Taxes and benefits of $20,000. You could put that in the wages if you wanted, but I'm going to go ahead and put it up here in the taxes category of $20,000. Office supplies, $9,000. So let's adjust that down to 9. Rent, $32,000. So that's going to go on line 20, but it's going to go down here to line 20B because it's actually for the office space. So we're going to put in here $32,000. And then finally our utilities of $7,200. So this business, after letting this tax software do all the calculation, we have a net income of $301,800. This would be our Schedule C net income and what we would put on our line 6. This would simply be our line 6. Now, the self-employment, since this is a single individual and their income is well above 128,400, they have to use the long form of the Schedule SE. And I don't expect you to know how to do the long form. So that's why one of the reasons I wanted us to do it in the tax program. But let's see how it actually worked. Let's see that it didn't do the short form. So if you go down to where the Schedule SE is, down here in Schedule 4, let's see how they calculated this 24,005. Notice these are all 0 because you can't use the short form. When they go through, they had to go through and do all these calculations and finally end up here, the 24,005, and then half of that, they get a deduction for 12,003. So let's see where the 12,003 ends up here on line 27. And then eventually it updates our line 7 amount. So our line 7 is 12,000 less, $12,003 less than our income. Now, when we look at the line 9, the Tax Act software, to my knowledge, has not updated enough to where even if this was was not a specific service business, I haven't found a real good way to put in what line 9 would be. So in our final example, I'll actually just kind of have to tell you the answers, or what you would want to do is go through the VITA software. The VITA software does have a place where it says this is not a SSTB, and then it will do the calculation for you based on how much wages you have. You have to tell it how much wages and your basis of all your property, but then it'll do the calculation to see if you do get something for line 9. But notice for this example, this business does not get a deduction. They are considered a SSTB, and they are well over, their taxable income is well over the single threshold. Remember, the single threshold was at 157.5 and stopped at 207.5. So they get nothing. So our taxable income is simply these two deducted from each other. And then the other reason, one of the other reasons that we did this actually on the tax form is this one, you can't look this up in the back of the book and just get a real easy answer. You actually have to do the long form, the long version. And you can still do it. We did that back in week 1. You'd have to look up what bracket does this person fall in and then do the long calculation. Nice that the tax software does that for us automatically. So this person owes in federal taxes $72,918. Line 14, they tacked on $24,000 in their self-employment tax that we already showed was how it was calculated. Now you think, well, that it was only $24,000 and say $5 or $6. That's true, but they also had to add one other amount on Schedule 4. They had to add in the excess Medicare tax. If you make over a certain income, depending on if you're single or married, you actually have to pay another 9.9% of Medicare tax that you wouldn't have normally paid for those in regular income brackets. So they had an extra $708 tacked on just in Medicare tax. So that's where they got the full $24,713 instead of just the $24,005. Finally, our last piece, when you add up these two together, this doctor owes $97,000 out of the 301 income. So a huge chunk, almost 33%. The 97,000, they only paid in 96,000. So the difference is this person still ends up owing 1631. So here are the final answers. Not that one, but this one. And then for H has the exact same information. The only thing that's different with H, well, we get to pay lower amount per quarter because we're going to find out that since we're a manufacturing business, we actually get to take the qualified business income deduction. And I wanted to show you how much difference that qualified business income deduction does to your total tax due. So instead of this being a service type business, this is now a non-service business. So the first parts are exactly the same. The first 3 lines, there's no change until we get to the business income deduction. This time we do get a deduction, and I actually calculated it out for us. So let's see what I did. And then I confirmed it by doing it with the tax program on the Vita tax software. So I take the taxable income or the qualified business income, whatever's lower. The qualified, since there was no W-2 income, our taxable income would be the lower amount. So if we find that, our taxable income would be the $289,797 minus the standard deduction. So our taxable income is $277,797, and that's what I took. Took our taxable income of $277,797, multiplied that by 20%. There's no need to actually do this number. I could have done this one by 20%, but I already know that this one's going to give me a smaller amount just because it's a smaller dollar figure than this one. So I'm simply just going to skip that step and take 20% of this. So my step 1 answer is $55,559. On part 2, I tell us that the wages of all the employees was $130,000, so we take 50% of that, and we get 65. I didn't mention anything in the problem about any unadjusted basis of property, so that's automatically going to be a much lower amount. So I know that this one's going to be the greater of those two. So my answer for step 2 is the 65,000. And then for line 3, I take the lesser of 1 or 2, and it ends up being line 2. It ends up being line 1. Step 1 is the lower amount, so that's the amount that goes here. Subtract out the 12, subtract out the now 55,000, a huge deduction. Takes us down to only taxable income of only 222 instead of the 277. When you add in, notice this is still the same. We still have the same self-employment tax. It's just our federal tax is a lot different, 20,000 less basically. And instead of owing 97,000, we now only owe 78,000. So the qualified business income deduction is does really well. All right, that's a lot to take in. So at this point, we're going to close out our part 3, and then in our final section, we're going to finish out with depreciation and how businesses can depreciate with the new tax law as well.